Good Fed day, everybody. How's everyone doing? Good morning. Good day. Hi, Brock. So the S&Ps are testing it's a 2-week. Hi, Hugo. It's 2-week off number. It's right here. The high of the move, the close was 34.20. Everyone see that? So that's where we are going into the Fed. Also approaching 50% retrace and the 200 MA on the 2-hour. Let's look at the 4. Already coming off a little bit, but you know, it's roulette. Wheezy, how are you? Arena. Shahab, how are you? Hugo, Sinatra, everybody, all you warriors, my trading warrior brothers and sisters. So I want to see what we do up here at the 50% level after the Fed. I'm not going to do anything new in front of the Fed. Here's my question of the day for you guys. Yesterday's turnaround Tuesday trade. Hi, Amira. Was up here at 27.50 with a 25-cent stop, had a 10-cent drawdown and, 50-cent break. Who took it? Anyone cash in on a piece of this decline? Called on the turnaround Tuesday call yesterday. Okay, I didn't take all 50 cents out of it, took half out of it, 20 cents. So, I don't know what to do here. I have noticed gold's almost back to the highs that we had yesterday. So, most people are thinking the gold's going to break out, and maybe they're going to be right. We're not that far away. In fact, if I adjust the line, we've already had a breakout. And maybe all that we had yesterday was some kind of retest. Let's see. Maybe it was here. So just something to keep an eye on there. Silver hasn't retraced as much. See that? So it's still 25 cents under yesterday's low in the silver. Yesterday there was an Aussie short, and here we are. The Aussie's pressing up against the highs. I want to see what it does up here against this line. It's not that far away, another 14 pips. Yen continues on the breakdown move. We're, diverging a little bit here on some short-term stuff, but still looks ugly. I've seen it do nothing right. It measures, this formation measures about 103.5 on it. But we've had a pretty good move. We could get some kind of bounce, maybe back to the breakdown. But looks pretty ugly. And you know what? This week, for the most part, except for yesterday, the correlation of US dollar yen has reconnected with gold. US dollar yen lower, gold higher, not a ton, but definitely higher from where we were at the close last week, down around here on Friday. So until you think the yen is bottomed, tough to want to short the metals under those circumstances. Give me a Y if you get it. You guys get that correlation? So there's been a disconnect, and we've been talking about the yen being comatose, but finally got a move this week, and don't think we've completed it yet. So be careful about top picking metals while US dollar yen is declining. Okay. USD CAD still moving sideways I don't know, I'm leaning towards maybe buying. Yeah, bonds do. They finally are. You have yields lower, not by a ton. Here's your 10-year. Here's your 30, down a few pips. But yes, that's another correlation that has not been as sensitive to the yen move as US dollar yen has been to gold. But that is another correlation, Sansi. Okay, so oil's put on a pretty good show this week from 37 bucks, trading up here at 39. I really don't see a reason to short this except for this, at least yet. You know, maybe we get some kind of fib retracement off this big break. Maybe we're having one now. Let's see if I could get the fibs up. We're going to have Andre joining us this morning, Andre Cordoso. So we're going to get some harmonic views. Let's just do it from here. Okay. So I don't have the 50% retrace on it, but 61.8 comes in right around those moving averages up around 41. Maybe we're heading there. I might even think about taking some kind of shot on a pullback to 38. I was buying it early this week, 37.10, and was happy with 38. So here we go. I'm really not going to do anything until after the Fed meeting today. I would think that, wow, pound is just really coming out of the hole, and euro pound is now really correcting. Yeah. Yeah. I'd be thinking about shorting it up there. So euro pound, really nice correction. It's a shame we only had 2 drives up there. I was waiting for one more, but you know, this pullback in EG, you know, I'd almost be a buyer down here. So, you know, I don't think that this is the end of the move up here, but we're definitely pulling back from the 78.6 level up here.
Dale, good morning.
Yes, hi.
Sorry to interrupt. How you doing, man?
I'm doing okay.
I was just writing on the chat room. Actually, I had shorted euro pound at 92.15, and I just closed it at 91.50. I think we will get a. I think we will get a third drive, but I'm going to start to look shorting higher again.
Okay, maybe we will. You know, this was a pretty stiff RSI reading here before we came off. I mean, up here in the 80s. So nice trade still. You know, maybe we hold here. Almost starting to look a little bit like a flag. You know, this is your flag pull, right? And we're just getting corrective action, which could imply another high. So I'm with you on that. Nice trade. On euro pound, you know, there are some cases if I really go long term and look at the weekly. Let me get the chat out of the way, or in fact maybe it's a monthly, just to give, you know, every once in a while, you know, you need a telescope, right, bro? You're a macro guy. You can't do everything with a 1 hour chart or a microscope.
I start with the weekly always.
Okay, you ever look at the monthly?
Yeah, sometimes, yeah.
All right, so you see this reading we had all the way back here in 2008, you know? So really, when you look at it, you know, it's really been sideways. Maybe we are just, you know, distributing. I know I have so many fibs here, it's hard to even see the candle, but definitely in the resistance zone here. Almost looks like, you know, if you want it to really be a bull, you could call this a left shoulder, call this a head, and maybe the right shoulder isn't developed yet. And because the left shoulder came all the way.
I was thinking
here.
exactly the same.
Were you, Andre?
I was thinking exactly the same, Dale. That's the eventual heads and shoulders there, just ending. Yeah.
Well, you're here, bro. Why don't you feel free to take over the screen?
No, just finish your insights.
I'm finished. You know,
okay.
and they hear me all the time, so
Okay.
you know, you're a treat for people to hear, and I'd rather look at your charts than mine for a while. Give me a change of pace. Isn't sentiment at extreme in the U.S. dollar? Not quite extreme, but there's still a lot of bullishness. Why is the pound so bullish? Because it got hammered. Last week there were days the euro was up 80 and the pound was down 120. So anyway, maybe Andre could answer that question. So take it away, brother.
Can you see my screen?
Yeah. Euro pound.
Euro pound. Well, basically, I see bullish hidden divergence at this point. We are trading back to the weekly fractal. So that weekly fractal was formed last July, and we are now threatening that level again after that rally. I was expecting some pressure before a breakout of that resistance, but as you can see, that the market has gained some strength, and we have a new daily fractal above. But what matters at this point is I'm trading oversold. I'm facing the weekly fractal support, and we have clear bullish hidden divergence there. So basically, we have RSI trading oversold, and the price retesting the previous structure resistance, which may offer some pressure there. So let's see how it will behave from here. Nothing specific at this point for euro pound at this point. I just noticed that divergence between the most recent lows and the retest of that fractal weekly.
Can you explain the difference between what most people see as divergence and what is hidden divergence, Andre?
Of course we can. Actually, we have some examples there of bullish divergence when the price when RSI goes oversold one first time and then trades oversold again, but above the previous low. So we have a clear oversold bullish divergence there. But either divergence, I search for that either divergence, and we need to pay attention to price action because the market enters overbought there, then a small fast pullback, and then new highs, and then
lower reading.
Lower reading, exactly. And now we are, and it's important when we are facing important structure. In this case, we are facing a weekly fractal resistance, which may act as a support now. So basically, we are facing that oversold conditions. I use my RSI a bit different. I use my 80s and 20s. Lower and higher bands. So I search for extreme conditions to trade those or to search for those harmonic patterns. So basically we are facing a potential pressure support. So previous resistance, next support. Let's see how the market will behave there. Obviously a recover of that weekly fractal may trigger more bearish momentum. We have also the 38% Fibonacci retracement right there, right below that weekly fractal, and then all the other Fibonacci levels. We have the 200 moving average also pointing 90.24 and the golden Fibonacci at 1929. So basically a fall below that fractal. We have the price structure, which may offer some pressure right below that fractal. So basically, I will wait for that consolidation at this price zone. So I was trying to select a few charts to show you, and I was tagging those with blue tags, and as you can see, I have a lot of things to show you. I will not have time eventually to show you all or to show you everything that I want to show you. Let's start from the top. the cable threatening that major ascending trend line. I called people attention to this previous structure resistance. The market ends up forming a fractal there, a daily fractal support on a lower time frame. We have also the most recent fractal right there, right at 2841, and it seems we are recovering above that major trend line at this point. So basically, I will not be surprised with the cable trading the 1/600 extension. It's an extension from this very last swing low. So usually the market feels some pressure at those levels. That let's see how the market will behave, and converging with the golden Fibonacci retracement level. So basically we have a convergence between both the golden Fibonacci levels, the retracement and the extension at 132.027. So that is where the bearish shark pattern may complete. So basically we are searching for one first bounce, a recover, new low, and a bounce again. If we pay attention to the close price of this structure, we may see a retest of this trend line. Actually, we can use the closes. Basically, it's a line chart. We can use a trend line covering those lows and expect a retest of that trend line. We can use also the lower lows of the structure. Eventually, it will converge with that area. This is actually a larger time frame to check for that. But basically, I'm expecting that bounce for the cable to that territory. Let's wait and see. That will complete the bearish shark pattern. Basically, that shark pattern will search for a retracement back to the 50% fib. So we expect from there another fall into the 50% Fibonacci retracement level. And usually that completes also a bullish sequence, which is not what I'm searching for at this point. Let's see first if the market will react from that golden Fibonacci level. If the market reaches that level, we never know. But if the market achieves that level, that will form the bearish shark, and and we will expect a retracement from that price zone. Let's wait and see. Euro versus dollar, I'm working on a lower time frame. I was expecting a violation of that daily fractal above. The market ends up finding some pressure or finding some support at 200 moving average. So I was expecting some more upside momentum, and I was expecting that those patterns get formed above. For now, one of the patterns that eventually can be formed, but we still need the violation below that fractal support, is a Gartley pattern, which will put the price trading very close to the daily fractal support. And try to follow me, please, because it tends to be confusing after a few draws. So basically, if the price decides to fall again into that 227 extension, that will form the bullish Gartley pattern, but we still need the violation of this fractal support, the most recent one. So a bit confusing at this point for euro versus dollar, so I prefer to stay away when charts tend to not follow my insight. A bit clear Australian dollar. Also, let me try to show you a big picture here. There's a nice ascending structure, ascending channel. I draw this as a parallel structure. If you go into a 4 hours time frame chart, the market has retested that trend line, actually threatening the violation of that structure. It has found some pressure and some support at 200 moving average, and we are now recovering that trend line. Basically, what I was seeing here, it was the potential inverted edge and shoulders, and the convergence between not only the default completion point or the default projection actually for the edge and shoulders, the 200% Fibonacci extension, but also the completion point or the pressure zone between golden Fibonacci extensions, one minor bearish crab pattern at 73, 74, so that will complete the bearish crab pattern there, and then those major sharks between the 1618 extension and the 224% Fibonacci extension. Basically, the market can actually extend to that Fibonacci extension to complete the pattern, but I'm expecting some pressure around 73.80, 73.74, around that price zone for the Australian dollar. New Zealand, the Australian dollar, yeah, it's very constructive. And actually, we have a few other patterns before. So that head and shoulders, this bearish shark pattern, this bearish crab pattern at 1618 extension actually offers some pressure. Nice 3 drives there, I believe, Dale. We have also some divergence there between those 3 drives.
Yeah.
And then obviously a fall, a retest or a reinforcement of that trend line, another head and shoulders, and eventually we are now triggering that head and shoulders. Basically the breakout of the next zone, the retest of the next zone, and if the market breaks above these previous structure highs, we may see the 200% Fibonacci extension as a default projection being reached. If that happens, you already know we have that pressure zone above with very shark and crab patterns projected there. So the Kiwi, very similar in terms of structure, in terms of ascending channel. We have this broken resistance here. Let me try to get this line clear. We have this initial kind of a resistance there. The market has violated that structure. Actually, we have a very fast retest of this trend line there, new highs, and then we started to plot this as a potential cup and handle. So cup and handle default target reached, some pressure there, very sharp pattern at 1618 extension, golden Fibonacci retracement there. This golden Fibonacci retracement, actually, I need to pull back. It's a retrace. It's a golden Fibonacci from these previous structure highs, from these highs from July. So we are facing that major golden Fibonacci, and we saw this very sharp pattern being completed, and then symmetrical 3-wave structure. So basically, I was thinking on one eventual ABCD pattern. I was expecting some pullback after that symmetry. There was kind of a structure, kind of a parallel channel there violated, and we are now consolidating. Actually, not consolidating. Actually, we are trending higher above this channel. So what we have at this point, and I'm not so sure if the market will respect that pattern from here, we are facing the bearish cipher pattern. So I was expecting, I still am expecting a retracement before a violation of this structure highs, before the violation of that weekly fractal. If the market violates that fractal, it will invalidate the pattern, and we will search for other Fibonacci levels above. In fact, we can use a 1618 extension from this very last swing low and search for the 1618 extension and the 224% Fibonacci extension level. So basically, we will transform these bearish cipher pattern into a shark extended to the 161 or 224% Fibonacci extension. Basically, the 1618 extension may work as a false breakout above the weekly fractal. We need to observe the market conditions there. Note that we are already trading overbought after some support at the 50s level, I believe. Let me just confirm that, but I believe we are very close to that level. So basically support, and we are now facing again the monthly fractal 67.55. So violation of that fractal eventually will offer more upside momentum for the Kiwi, but let's not ignore that bearish cipher pattern. That's what we have at this point, and those who are searching for for shorts, for the short side of the market for the kiwi. Eventually, this will be the zone that we will search for those shorts. So basically, we need to respect that weekly fractal resistance above. Australian dollar versus the New Zealand, I was expecting, and it's still possible to form the bearish 2618. The 2618 it's a pattern which depends on a technical double top or a technical double bottom. Basically, a double top will validate with a violation of with a broken neck, with a violation of the support level. And then we wait for a retracement to the golden Fibonacci 61.8% Fibonacci level. That will form the bearish 2618, and we start to project one symmetrical ABCD pattern from the golden fuse. So that was what that is what I was expecting for the Australian dollar versus the Kiwi. This can act as kind of an head and shoulders there, a minor or a lower degree head and shoulders above that monthly fractal. Note that we're still trading that monthly fractal resistance. So basically, we are threatening the violation of that price zone, but this can work as an eventual head and shoulders there. So basically, a projection. Let me try to get a projection for those who are searching for the same market behavior.
Can we see what you're, after this, Andre, see what you're seeing in stock indexes?
Of course. Actually, I have already there the 200% Fibonacci extension for the eventual head and shoulders formation. So basically suggesting a retest of that weekly fractal, and then obviously the default projection for the 2618. S&P, I changed this channel a lot of times because we need to adjust, and I started to see these potential trend line support. So obviously, as soon as we approach that trend line support, we start to imagine the price falling below that structure, and we start to search for potential pressure zones below that structure. And I was starting to plot these eventual crab pattern. So basically, the market is now threatening the violation of the previous highs, 34.25. So, and in my opinion, well, we have a technical double bottom there. We have a close price retested with a second time. We have the clear V shape between the two bottoms, and we are now threatening the violation of the next zone. So basically, the 200% Fibonacci extension, 35.16, the default projection for the technical double bottom. And if the price achieves that level, we will see if the market finds some pressure at 88% Fib, the default bearish bat pattern completion point. So let's assume a retest of the previous structure highs will offer some pressure there. But what matters at this point, technical double bottom, and now threatening that the validation of that pattern. So the validation of that pattern, I don't like to trigger that pattern immediately after the breakout. Usually I prefer to wait for a confirmation. I need the price to trade above the next zone, to retest the next zone, and then to violate the previous structure resistance. That will be my trigger point if the market decides to violate the resistance above the broken neck. So I need to wait for that to happen, and I don't know where that will happen. Eventually, the previous structure highs, 34.48. We have previous structure support and a pivot zone there at 34.86, I believe, 34.85. So if the market finds some pressure there and then a retest of the neck, that may offer some bullish, some bounce and an interesting momentum to join. For the S&P, the DAX, we don't have projections above, considering actually let me go into 1 hour time frame. it can happen actually. Let me just measure these.
By the way, guys, we just got US retail sales
Yes.
worse than expected, and revisions also down. So not great numbers.
Okay.
Carry on.
Let me just try to measure these. Do we have a golden Fibonacci there? 127% Fibonacci extension. So this will be a minor Gartley pattern, a retest of the daily fractal resistance. We have that bearish candle there, but we find some pressure very close to the 127%. So I see this as a potential head and shoulders, a minor head and shoulders formation, which may put the price trading below the most recent support levels. But we have this major bat pattern and alt bat pattern above. So basically 13,382. So that will complete the bearish bat pattern for the DAX. That will invalidate the head and shoulders, by the way. So if the market needs to respect that structure, and if we face this as a head and shoulders trading above the most recent 4 hours fractal, will invalidate the pattern. But let's see how it will react. A new high above the most recent resistance will form that bearish bat pattern at 88% Fibonacci. This is a retracement from all these bearish momentum, so from all these last correction. So eventual head and shoulders for the DAX. I don't know if you have any other pair or instrument to cover.
How about metals?
I have a lot of them. Metals. Well, gold threatening resistance at this point and threatening the violation of not only the daily fractal position at the 1966, but also the most recent trendline resistance. So I draw this as an eventual parallel structure. At this point, what matters is this trendline resistance. The market is now threatening that structure. I published this morning eventual bearish Gartley pattern, a major Gartley pattern there at 1982. So if the market needs to respect these previous structure highs, it needs to find some pressure below, obviously. And if you are searching for a short side for gold, eventually that bearish Gartley pattern may offer some pressure. But trading above this structure, and well, I can always project patterns above and below, and above that structure, above these previous structure highs. If the market decides to break above these highs from September, the first day of September, actually, we have this confluence zone between, let's say, the 127, two 127 levels, and a 168% Fibonacci extension. Basically, we have this crab pattern, these blue lines there, this eventual extended bearish crab pattern at 2045. So basically, a retest of the weekly fractal may offer some shorts, but the pattern will complete a few points below. Taking
silver,
to take in consideration all the structure, and because those patterns will form between the previous structure highs and lows, and when we start to measure those Fibonacci levels and criteria, and we start to search for those criteria, eventual Gartley pattern actually above. So basically we have a convergence between this minor crab pattern at 2045 and these in the few points above 2057, that major Gartley pattern for gold. Silver potential, I saw this on a lower time frame as a potential cup and handle. The market has found some support there at $27 actually there. I saw these actually. Let me push my previous chart for the silver. and let me try to push this. Okay, this is a 12 hours time frame chart. I published this chart before at ForexAnalytix. I saw this as a potential edge and shoulders inside this kind of a triangle. So basically the edge and shoulders still as a possibility. So it's still possible to form that right shoulder right there. Actually, the market can form the right shoulder with those supported by those resistance, those fractals there. I will not be surprised to see that right shoulder being printed above, well, default cup and handle projection at 28.46, 28.44. That will put the price trading very close to the 88% Fibonacci retracement from the head to the next zone. So the head to the next or to the most recent daily fractal support. And that can form another bearish bat pattern there. Let me try to adjust this. So basically we wait for the 88% Fibonacci retracement. Let me tag that level there. 28.55. So that will complete the bearish bat pattern, but that will complete the bat pattern outside this triangle. I see this as a symmetrical triangle, and eventually, as we know, and by manuals, triangles should trade in the direction of the trend. So I'm expecting some more bullish momentum for the silver without ignoring the patterns the market forms inside this sideways moving process. If there's something pointing down, I can, well, let me try to clear this because we can't see nothing of this. So basically, this is a weekly or a daily time frame or a higher time frame for the silver. Note that we were trading the 224% fib as a very sharp pattern completion point, the last one. So the first one is the 160.18% Fibonacci extension. The next one is the 224%. This is the last sharp pattern for the silver at this point. So I'm expecting a retrace. I was expecting a retracement to the 38% Fibonacci retracement. The market has offered that reaction very fast, and but it has failed that 38% Fibonacci retracement there. So basically we have a new weekly fractal support at 23.44. So, and if I need the price level for the short side, that will be my price level. That will be my 38% fib, the weekly fractal support, 22.90. I would love to see silver sinking into those levels. That will offer a nice opportunity to go long again for more upside momentum. But let's see what will happen from here. Let me cover those yen pairs. Let me go into a lower time frame. So I projected this pattern today. I shared this pattern today. We are trading below the weekly fractal support. We have patterns projected below kind of I projected this as an edge and shoulders here. The head, the reinforcement of the neck, the right shoulder. So if the market decides to sink and to respect that pattern, we will see dollar versus yen trading 103.37, a reinforcement of this previous structure support. I will not be surprised to see that happening. But I shared today this eventual bullish alt-bat pattern at 113% Fibonacci extension. As we can see, the recent data release offered some more downside momentum for the pair. So I will not be surprised to see the invalidation of that pattern and to see more downside momentum for dollar versus yen, and eventually that the reinforcement of this trend line. Very constructive recently. It doesn't mean the next pattern that we will search or that we will find, it will work, and eventually this will be the case. We have a few examples before for harmonic trading and how to plot them and how to trade them, and how to search for those default targets also. So, but sometimes they will not work. The last one that I published at ForexAnalytix did offer a very interesting momentum. I shared this very last bearish shark pattern at 168 extension. Look how amazing that pattern has worked. But it doesn't mean the next one will work also. So basically, we are now facing the weekly fractal support and the alt-bat pattern completion point. Usually, I like to protect my trades with the 127 extension, the next Fibonacci extension below the completion point. So basically, if we need a retracement, I need some adjustments at this point, 105.49. If the market needs to bounce from these levels, a retest of the previous 4 hours fractal support, I will not be surprised to see that happen also. But again, trading below that weekly fractal, that may trigger more bearish momentum for the pair. We have euro versus the yen. I shared this as a potential heads and shoulders also. We are now threatening the next zone. Daily fractal support right there. Default projection for the heads and shoulders at 122.26. The monthly fractal resistance. So that was a resistance printed in January, actually. So basically a retest of that structure. Heads and shoulders and eventual pressure zones right below the next zone. One of them 124.03, the 160 extension, the bullish sharp pattern completion point, and then extended to the 224, actually to the monthly fractal 122.87, another completion point and another pressure zone for euro versus the yen. This is daily, the daily pound versus the yen, now facing the 38% Fibonacci retracement. That's why the market is finding some pressure, and that's why the market has stopped the recent fall. I was expecting this bearish Gartley pattern. I projected that pattern. I shared this among our subscribers, among our community, 145.02. The market has failed that pattern just by a couple of points, reinforcing that resistance.
78.6, yeah.
Exactly, 78.6. And then not only, this is actually symmetrical, kind of a symmetrical.
Ever hear my fib poem, Andre?
No,
Okay.
or I don't remember.
All right, well, it goes like this. 61.8. Can you feel it resonate? And after you think you know the tricks, it stretches to 78.6.
Nice.
Beautiful.
You need to put it in a song, I think.
Yeah, anyway. I like 78.6 because, you know, the 50%, 61.8 retrace players are blown out by then.
Yeah, and it's funny because I mentioned this before. Usually people likes to pay attention to the golden Fibonacci extension, golden Fibonacci retracement and extension also. But there's no, with one exception for the 2618 trade setup, which completes and which requires the golden Fibonacci retracement. But
Right.
There's no other patterns relying on that specific Fibonacci 61.10% Fibonacci retracement level. It's funny. All the patterns, all the harmonics relies on 127, which is a multiple, obviously, of the 61.8. But yeah. all other patterns, the cipher pattern completes at 78, the bat pattern completes at 88. The Gartley goes to the 127, and then the sharks extend to the 161 to 24, and the crab pattern actually also to the 161. So there's no patterns completing at the golden fib. But we know that the influence that level may offer in some circumstances.
That's
will
interesting.
depend. But that is what it is. But what we have here, a very large symmetrical momentum. It has offered some pressure at 78.6, reinforced by those weekly and daily fractal, and the larger or the major structure. We have this potential trend line resistance covering above. So if the market decides to break below this weekly fractal, I will interpret these most recent highs as a false breakout above these highs, and I will search for an extension to the golden Fibonacci extension level. So basically, I will search for the shark pattern, a retest of the weekly fractal support. Obviously, as we all know at this point, the shark pattern can offer some pressure at 168 extension. It can offer a bounce, and then it can fall again to the 224% Fibonacci extension, or it can go directly to the 224% fib and completing the pattern there. The default target for the shark pattern, just to complete this pound versus the yen, the 50% Fibonacci retracement. It doesn't matter if the price will complete the pattern at 161 or at 224. As soon as the pattern completes, we will search for the 50% Fibonacci retracement as a default target for the pattern. Australian dollar versus the yen. Interrupt me, please, if you need, Dale. I saw this as a potential right shoulder. I was expecting some more bearish momentum there, some kind of a deeper ABCD pattern, something like to print the right shoulder. But this can work as a potential right shoulder. We are now trading above the monthly fractal resistance. So obviously recovering that fractal may offer some downside momentum for the Australian dollar versus the yen. Default projections for the inverted edge and shoulders, 90.44. So this is a huge projection for that edge and shoulders. Obviously, without ignoring the potential pressure zones between those Fibonacci levels in the middle, the 50%, the golden Fibonacci there, and I believe that 83.44 belongs to the 161.8 extension from this previous structure, or very close to that. This 168 extension, 86.83. So the 168 extension from this very last swing low projected above. So that may offer some pressure there. A false breakout, and I'm not sure. Let me just go into a 4 hours time frame. I want to show you also that those lower time frame events. But basically, between these highs, between those highs at 76, I believe, and the most recent highs. So that may also work as a false breakout above. So basically, we have these previous structure highs and then a rally above. So basically, we have these extension above these previous structure highs, and if that's obviously we need to wait for a breakout of these previous structure lows. But if that happens, and that will depend on how fast that will happen, we can start to project patterns below that structure, and basically we will search for shark patterns or a major shark pattern at 68.91. That can happen also, and that can form a different shape for the edge and shoulders, I believe. That will force me to adjust the next zone into an ascending next zone. That then we will see the price forming the right shoulder and retesting the lows of the left shoulder there. So that can happen also. But well, let's see what will happen there. Let me show you a lower time frame picture. Actually, I need to go into a 1 hour time frame. So we are now threatening again that trend line, that ascending trend line. I see this as a potential ascending structure, ascending wedge. So the market has recovered that structure. after a new daily fractal support outside return. So I call this as I interpret it, I consider this as an outside return. So the market prints a fractal outside the structure, outside and below the ascending structure trendline support, and then recovers the trendline support. Reinforced again with a new and the most recent 4 hours fractal there at 76, 73. So if the market decides to trade above the most recent resistance, we have patterns projected above. So we have convergence between this cipher pattern and the shark pattern at 77, 98, 77, 96. So that's small range of convergence for Australian dollar versus the yen. So this will be my point of interest for shorts. Obviously, I will not short the market expecting a huge retracement. We don't short those events based on higher expectations. We short that crab pattern based on a default projection, and the crab pattern will offer you a 38% Fibonacci retracement, which is nothing more than a retest of the previous structure resistance, which may act as a support. 38% Fibonacci retracement, that will be my trade at this point. So I will wait for the pattern to complete that minor bearish crab pattern, obviously maximizing my profits if I trade this bearish shark, because the market tends to search for the 50% Fibonacci retracement for the shark pattern. Actually, this is a cipher pattern, I'm sorry. So the market will search for the 38% Fib. So that will help me to maximize my profits and to set my break even for my stops. And eventually it will help me to trigger my trailing stop if the market decides to shift the golden Fibonacci retracement as a second target.
Andre, thank you. I mean, this was really comprehensive, and thank you for taking the time.
Much. Okay, no problem. I will join you.
I certainly agree with Jane. Excellent presentation, Andre.
Oh, thank you very much.
Thank you, man. I am a big fan. You know
thank
that.
You.
Okay, do we have a guest today? We do, right?
I don't see him here. Maddie Greenspan, are you here? Going once?
Well, I'm gonna take the screen.
Okay.
Until.
Thank you, Andre.
Thank you very much, and have a nice week, everyone. And
you're welcome. The best, man.
Thank you.
Thank you, Andre. I have to be gone in about 8, 9, or 10 minutes, but I have a few things to say before our guest comes. First of all, we are running our new season offer. You can see here, buy 1 month, get 1 of 3, 6 months for the price of 4, 12 months for the price of 7. We are also going to run, we didn't do it yesterday, we're going to do it today and run it for a few days, giveaway. So we're going to tweet this offer, and we're going to tweet about the giveaway. We're going to be giving away 3 3-month subscriptions plus a mug and a t-shirt, and
we should get the Nobel Peace Prize.
A signed photo of Steve. I don't know, whatever people want. All you have to do is
dartboard.
yeah, exactly. All you have to do is retweet it and then reply to us saying I want to be part of the giveaway, and you're going to be entered in the draw. Also, we need to mention our sponsors, Pepperstone, who with whom you can actually get, if you sign up and fund an account, you can get ForexAnalytix for free for a few months if you're not in the US and Canada. And if you are in the US and Canada, and otherwise we have we're sponsored also by Forex FX. We're very good at finding your needs in terms of brokerage, and so that is one thing. Also, I need to mention the Trader Summit, which is coming up 3 days. It's completely free. I've put the link on the chat box to register. We have 16 speakers. They're going to be amazing, and presentations and interviews and an amazing debate. And I think I'm going to be interviewing somebody as well. So there you go. See, there's a handsome guy there. Otherwise, the main event, how do I get rid of this thing? Hold on a second. Okay. Otherwise, the main event is the Fed. We did, Jerome Powell did mention in the Jackson's Hole Jackson Hole Symposium, he did mention that they're going to let inflation run hot if needed. So they're going to have a symmetrical inflation target. We are waiting to see if we're going to get more clarity on how this is going to work, etc. But as I always do, you need to take a step back. And obviously this is the main event of the week, but really the main event of the year remains the US elections. And we're getting close to that. There's going to be a lot of things happening on the run-up. You know how it is. The governments, they used to be judged in terms of how well unemployment was going, growth. Nowadays, the main place where they're judged seems to be indices, equity indices. So you can be sure that President Trump is going to try and use everything he can to keep stocks going higher. We've seen this over the past year or so. You know, we had the million China headlines. Now we're getting COVID headlines. So I think Donald Trump yesterday said I think he said 3 or 4 weeks away from a vaccine. I don't know where we're getting this information, but you know, this is the usual pump effort. Yeah. Also, the Fed, it's coming up tomorrow. Is it tomorrow or today? Today,
buddy.
Yeah. I lost the days. Yeah, it's coming up today. And
so what do you think with this chart, buddy? Are we going to blow to new highs, or is this going to be a failing rally and a shorting opportunity?
Well, we're definitely at a crossroad, and not only with the S&Ps, with equities, with quite a few dollar pairs. And if you see the DXY, I'm going to come back to this one. If you see the DXY, this is what I was expecting. We're not getting it. We're lingering below. It could be a false break very easily. I think the Federal Reserve is supposed to be independent. I have my doubts. President Trump does want equities a lot higher, so maybe we'll get a dovish Fed, an uber dovish Fed, and just push things higher. It's anyone's guess. The thing is, we've got twice this break and retest. I love these breaks and retests, especially on the weekly chart. One is here, and obviously here on the COVID one, we broke it. We tested the next week, and then wham. So now we're in this, ascending wedge. We're near the bottom, or at the bottom, or actually no, near the bottom. It's going to resolve itself one way or another, I think, by the end of the day. Which way around? It's a good question. I think risk reward is not good to be long equities or to be short dollars. They've gone so far. I think if you're short dollars, what happens if the Fed is dovish to the euro dollar? Maybe it rallies 40, 50 pips. What happens if they're hawkish, or if they're not as dovish as expected? We could get a bloodbath. So I don't have a position. But I think that I'd rather react to the reaction, just like you always say very correctly. But I think that it's going to resolve itself one way or another today. Euro pound's an interesting one. We talked about it earlier. I had shorted 92.15. This zone here has been working quite nicely. I covered this morning 91.50. Sorry, just earlier 91.50. I think we might get another push as we get more information out of the UK and Europe, but I think the end game there is still going to be something relatively positive. So I think here risk reward is better to be short. I'm going to be personally waiting for another move above 92, 93, maybe even higher this time. I don't know. Maybe I'm going to wait for the top of this zone.
Yeah, maybe we get a third drive there still above the 94.5 level to 96.
Yes, if things go fast, I'm going to wait, and I would love it to get up there. I really would.
Could.
So it definitely could. And same with gold and silver. I think we're going to get, we consolidated here above the zone. We seem to be pushing higher. I still think we will get a leg lower, something close to 1800, maybe even break that, because a lot of people are looking for 1800. If we do go lower, I think we might just extend below that. And I think that will be a great place to get long again. But for the moment, I still have a bit of my original position in silver. I got long at the average around 15. I got out at 19, 22, and 25-ish. And I have another quarter left, which I'm still considering what to do. And I think, again, here I'm quite bullish in the medium term for sure. But in the short term, I'd love to get a pullback towards 21, 22. Exactly what Andre said. He talked about 22, 22 and a half, didn't he? So I think that could be, and make no mistake, we could get a move like that pretty quickly. We saw what happened in March. The market gets one way, very one way, and then when things start looking like, this is not working anymore, everybody reaches for the exit, and this is what happened in March. And we're all, the market's conditioned to know that certain things are going to happen. Equities will always go higher. Whenever I say I think we're going to get a leg lower, people ridicule me. I don't care. I don't have a position. I'm not short and I'm not long. I'm looking to get long at lower levels. If they happen, great. If not, it's a trade I've missed. So. That's
I miss dozens of trades every day still, and you know what? It used to bother me until I wrote this down. I will miss trades every day, and it's okay because there's always another.
Absolutely, Dale. That's
take
really
the pressure off yourself, guys and gals.
And I'm sorry, Stelios. Let me just add a small thing to that sentence, Dale. It's more important to be here the next day than trying to get the trade today. No, it's more important to be sure that we are here the next day, the next session, than taking the risk just because we need to trade or just because we need to engage or to get involved. So
agree, buddy. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
Absolutely. I got to run. Is our guest here? Or? Oh,
no, Matty Greenspan's not here, so you could close it up, buddy. Why don't you hit him with the tagline and shut it down?
As a good friend of mine says very wisely, don't just count your pips, count your blessings. Thank you, everybody. Thank you, Coach.
Yeah, great job, Andre and Stel.
Thank you, Coach.
Who needs those other guys?
Thank you very much.
All right. See you guys
no,
later.
We are a great team, team.
Yeah, but we were 3 drives to the bottom. All right. See you guys later.
See you.
Adios.